Hi, I'm Dongxiang. Welcome to Digging into China, where we explore China in depth to reveal unique perspectives. Over the past few days, the U.S. China trade war has unfolded with remarkable intensity, so much so that the pace at which I produce my program struggles to match the rapid developments. We are witness round 1, round 2, and now round 3, each phase more gripping than the last. Xi Jinping and President Trump are engaged in unrelenting standoff, neither willing to yield. Trump imposed a 34% tariff on China, deeming it a matter of reciprocity, and Xi Jinping promptly responded with a 34% tariff in kind. Now, as we reach the third round of this confrontation, Trump has escalated further, levying a 50% punitive tariff, bringing the total U.S. tariffs on China to an astonishing 104%. Without hesitation, Xi countered with an additional 50% tariff on his own. Then, on Wednesday, Trump made an unexpected announcement. Given that China alone is boldly resisting America's tariff measures, he is increasing China's tariff to 125%. Meanwhile, all other nations are granted a 90-day exemption subject only to a baseline 10% tariff. Bear in mind that the 125% tariff Trump announced on Wednesday was in addition to a 20% added to China since President Trump returned to office. The actual tariff is 145%. Upon this announcement, the U.S. stock market surged dramatically, reaching heights scarcely recognizable. This maneuver by Trump delivered a decisive blow to Xi Jinping. More strikingly, it swiftly unified America's allies while straining their ties with China. Consequently, these allies are now far less inclined to align with China against the United States. Trump has at last shifted away from a broad global tariff offensive, revealing that his true focus has been China all along. I suspect this reflects the prevailing sentiment among many Americans. Targeting China alone is sufficient. Engaging in a trade war with the entire world would inflict excessive harm on the United States itself. It appears Trump is not entirely reckless. He remains attuned to the needs of the capital markets and receptive to counsel. Alternatively, one might consider that he is employing this strategy to gauge the reactions of his allies, draw China into a trap, provoke a response, and isolate it further. Remarkably, Xi Jinping has taken the bait. On Wednesday, U.S. Treasury Secretary Bessent articulated it thus.
This was driven by the president's strategy. He and I had a long talk on Sunday, and this was his strategy all along. And that, you might even say that he goaded China into a bad position. They responded. They have shown themselves to the world to be the bad actors. And we are willing to cooperate with our allies and with our trading partners who did not retaliate. It wasn't a hard message. Don't retaliate. Things will turn out well. What's your message to me?
The trade war's trajectory is now unmistakable, leaving Xi Jinping as the sole figure reeling from this impact. Why did he insist on challenging the United States so directly, offering no room for compromise? He has preserved his dignity but sacrificed the substantive gains. With the U.S. tariffs on China now at 125% or 45%, and other nations benefiting from Trump's exemptions, they have little incentive to stand with China and risk incurring his displeasure. Xi now faces a critical decision. Will he persist in his defiance of the United States, raising tariffs to 125% as well, or concede defeat at this juncture? I anticipate he will choose the former. He is likely reasoning thus. The sanctions have already reached this severity. Whether tariffs are 100% or 200%, the distinction is negligible. It amounts to a complete trade rupture. Why surrender now? How would I justify that to the patriotic masses at home? Where do I place the prestige of the world's second largest power? Better to endure to the end. After all, I'm not the one who will bear the hardship. I have observed a matter worth discussing. one that reflects a profoundly unwise action on China's part. Last week, U.S. Treasury bond prices declined sharply, particularly the yields on long-term bonds, which rose abruptly. This suggests a significant volume of long-term treasuries was sold off suddenly. Speculation arose as to the culprit. Japan holds the largest share of U.S. treasuries abroad, followed by China. Could one of these nations have deliberately divested to retaliate against the U.S.? Japan's finance minister swiftly clarified, "We are not responsible. We do not engage in such reckless sales." China's leadership, however, offered no comment. Yet, various voices within China eagerly claimed the responsibility, asserting, "Indeed, we did it. What of it? Trump seeks to suppress bond yields, so we offload over $700 billion in Treasury to drive them up and disrupt his plans, a precise counter-strike." Whether China truly orchestrated this remains uncertain. Nevertheless, the rumors reached the Treasury Secretary Bessent. During a Tuesday interview with Fox News, he was asked, "Certain parties suggest the recent drop in Treasury prices stems from China intentionally selling bonds to strike back at the U.S. Your view?" Bessent responded with derision. "If they have indeed done so, it is an act of sheer folly, akin to lifting a stone only to drop it on their own feet." China has effectively invited this accusation upon itself. In my assessment, it is unlikely China was the primary actor. The decline in Treasury prices these past few days more likely stems from the strained market liquidity, prompting institutions to sell safe assets to meet margin requirements. Yet China's public discourse insisted on taking credit, ensuring that even the U.S. Treasury Secretary took note. This has fostered the perception that China is initiating a financial offensive against the U.S. In response, Bessent indicated that the U.S. might expel all Chinese stocks from American markets as a reprisal for this perceived financial assault. Thus, the situation continues to deteriorate. In truth, the notion that China could deliberate the U.S. by unloading treasuries is of limited merit. China holds approximately $700 billion in U.S. treasuries, equivalent to a single day's trading volume in that market. A sudden sell-off would indeed depress prices temporarily, but the market would soon absorb the excess, and the stability would return. For China, however, liquidating $700 billion in such haste might yield only $500 billion in return, a straightforward consequence of driving down the price oneself. What benefit, then, does China derives from squandering such sums? Moreover, selling treasuries merely converts them into dollars. Would China retain those dollars? If so, it remains tethered to dollar-denominated assets. If not, and exchanges them for yuan, the yuan's value might rise briefly. Yet when investors observe that China's treasury holdings have vanished and its foreign reserves diminished, with insufficient dollars to sustain itself, they will hasten to exit China. Alternatively, they might speculate, are they preparing to move on Taiwan retaining no treasury at all? In either case, capital would flee. Treasuries serve as a signal of confidence for foreign investors. They cannot be carelessly discarded. Consider the past 2 years. China has incrementally increased its gold reserves while gradually reducing its treasury holdings. Yet it has never executed a massive sell-off. Last year, it shed perhaps $50 billion in total. China is well aware that attempting to undermine the U.S. through treasury sales is an imprudent strategy. You likely noted the yuan's movement last week. It depreciated beyond 7.4 in a single day. Some might view this as significant, but in fact, it reflects China's efforts to moderate the decline. Reuters reported that the central bank instructed state-owned banks to refrain from purchasing foreign currency for their own accounts and intensified oversight of client forex transactions, all to temper the yuan's fall. I suspect the central bank offloaded a modest portion of treasuries in recent days to bolster the yuan, though the amount was surely limited. With the U.S. tariffs on China now at 125%, the resultant trade losses are severe, inevitably straining China's foreign exchange reserves. I must caution those in China. The annual $50,000 foreign exchange allowance may soon be revoked, as China's dollar supply grows increasingly constrained. Should Xi persist in his resistance today, imposing further tariffs or even hinting at dumping treasuries, Chinese stocks listed in the U.S. could face immediate expulsion. Those listings currently provided a vital source of dollars. Without them, Xi's options narrow further. Consider the future. China's foreign reserves will face mounting pressure, and the yuan's exchange rate has reached a point where depreciation is unavoidable. Yet the central bank expends dollars to slow this descent, striving to prevent capital flight. A rapid plunge in the yuan would trigger widespread alarm, everyone scrambling for dollars, both foreign and domestic funds departing en masse. The consequences would be dire. Ultimately, in this trade war with the U.S., China possesses few viable options. If Trump can unite his allies to concentrate their efforts against China, the repercussions for the U.S. itself remain manageable. Indeed, Trump's domestic support might even solidify. In such circumstances, he need not fear the Communist Party compelling the Chinese populace to endure extreme hardship to outlast him, that being China's sole advantage. Without it, China's prospect of prevailing diminished to nil. Is there anyone within the Communist Party willing to counsel Xi to seek reconciliation with the U.S.? During the 2018 trade war, Xi initially adopted a similarly resolute stance, countering Trump at every turn until Liu He persuaded him to negotiate a truce. Where is Liu He now? He has long been unceremoniously sidelined by Xi. The president is clear. Who among Xi's current circle would dare advise him to prioritize the people's welfare and pursue peace with Trump? They are more likely to stoke his resolve, urging him to continue this struggle against the U.S. On Tuesday last week, the State Council issued a white paper on U.S. China economic relations, emphasizing the pursuit of reasonable solutions through dialogue. Many interpreted this as an indication that Xi might be open to discussions with Trump. Major outlets like Bloomberg reported as much. Yet the reality has proven otherwise. The document was merely a diplomatic gesture, a formality from China's side. Xi's personal determination dictates policy, an unwavering anti-American stance, and a commitment to wage the tariff war to its conclusion. At this stage, further tariff escalations by either side had little practical significance. When tariffs exceed 100%, goods become effectively unsellable. U.S. importers would sooner forfeit deposits than accept delivery. Thus, the narrative is poised to shift. What will Xi's next move entail? I anticipate China may direct its effort from goods to service trade. U.S. services export to China amount to roughly $40 billion with a surplus of approximately $20 billion, a third of which derives from tourism and education. Even a complete embargo would yield limited impact. Niu Tanqin, an affiliated social media account of Xinhua News Agency, proposed 6 major countermeasures against the U.S., among them targeting service trade. This option has evidently resided within Xi's repertoire, ready for deployment. Will he employ it today? Should he do so, it would mark an escalation, expanding the conflict from goods to services. Should that avenue be exhausted and both sides exchange further volleys, She might then emulate Europe by imposing substantial fines on U.S. technology firms. With the service trade already a battleground, he would have little compunction about antagonizing those corporations. At that juncture, Chinese stock would likely face expulsion from U.S. markets by Trump's administration. Thus, I strongly advise against investing in Chinese stocks at present. The risks are exceedingly high. Xi stands isolated, the sole leader contending with such exorbitant U.S. tariffs. He is undoubtedly feeling vulnerable, perceiving global mockery, which renders him even less inclined to seek a negotiated resolution with the U.S. He appears determined to pursue this course to its end. Locked in opposition with Trump, he may well be thinking, I need only endure 4 years. Thereafter, I might find an opportunity to mend ties with the next U.S. president. But with Trump, reconciliation is impossible. Observe China's response now. I wager it remains steadfastly defiant, committed to opposing the U.S. without compromise. Thank you so much for watching. If you find this video helpful, please like it, drop a comment below, and hit the subscribe button right here. It really helps YouTube suggest my video to others. I'll be back with more content soon. Until then, be well.